Thank you for joining us at xm.com for this Forex Preview video. Fed policymakers have made it crystal clear that they want to bring inflation down. So Wednesday's CPI report will be crucial for market sentiment as to whether inflation is indeed cooling down. I'm Cristina Marujos. Joining me today is our lead investment analyst, Rafi Boyajian. Rafi, will be getting important data out of the United States this week. We have inflation data on Wednesday, followed by retail sales on Thursday. What are we likely to see in the numbers, and could those possibly dampen expectations of aggressive Fed tightening?
Well, Christina, we're expecting another moderation in the CPI readings for the United States. So last month we saw a drop from 9.1 to 8.5%. We're expecting a further drop for August to 8.1%. And also the monthly pace is expected to drop for the first time since May 2020. Now, most of the drop is due to falling gasoline prices, which comes, of course, on the back of the downward trend in crude oil prices over the last 2 to 3 months. But last time in the July report, there were some encouraging signs that the easing price pressures are kind of broad-based, as we saw the price of other categories, categories other than gasoline, either drop or rise at a slower pace. But the thing is, even if we are now at a peak inflation in the US, it's looking like it's going to be a slow grind lower for inflation because core inflation, that's the measure of CPI that strips out food and energy prices, is expected to have edged up from 5.9 to 6.3% in August. And this is in a way the point that the Fed's been trying to make, that inflation is still way too high, even if it has peaked, and there's a long way to go before it's back at the Fed's 2% target. The clearest signal of that was at the Jackson Hole Symposium when Powell doubled down on his pledge to get inflation back under control. So as far as the Fed is concerned, the labor market is too tight, and so it would be quite a risk to ease up on rate increases when that is the case. And consumption also has held up pretty well, although we may see some weakness in retail sales in Thursday's set of data. But again, this won't be enough to deter the Fed from hiking by another 75 basis points when it meets in just over a week's time.
Let's also turn to the greenback now, because after enjoying the benefits of safe haven flows and widening rate differentials, we saw the dollar pull back a bit. Could softer than expected data revive the rally?
Well, the extent of the dollar's pullback is a bit of a puzzle because not a lot has changed regarding the outlook for the US and other major economies. We had some intervention warnings from Japanese officials about the yen, and we've been getting some hawkish signal from the ECB post last week's meeting that Eurozone rates might have to go up to restrictive territory. But there's probably also a bit of profit taking going on after what was an incredible rally for the dollar over the last few weeks. And in addition to that, we're also seeing some signs that some investors may have started to bet that the September rate hike will be the last 75 basis point move from the Fed in this cycle. So although on the one hand, markets have upped the bets of another big rate hike next week, they think this will be the last of this size. So barring any developments that spark a flight to safety, the dollar may find it a bit more difficult to rally as hard as it has been able to do up until now.
Rafi, thank you so much. This was a Forex Preview here at xm.com.